What are the most common types of contingencies in residential real estate? In this video series, we will be exploring what they mean and how they can impact your real estate transaction. Let's begin with, what is an appraisal contingency? An appraisal contingency is a clause in a real estate contract that allows the home buyer to back out of the transaction or renegotiate the terms of the sale if the property appraisal comes in lower than the agreed upon purchase price. When a buyer applies for a mortgage to purchase a home, the lender requires an appraisal of the property to determine its fair market value. If the appraisal comes in lower than the agreed upon purchase price, the buyer may not be able to obtain financing for the full amount, and they may have to pay the difference out of pocket or renegotiate the terms of the sale. With an appraisal contingency in place, the buyer can't protect themselves from being obligated to pay more than the fair market value of the property. If the appraisal comes in lower than the purchase price, the buyer has the option to back out of the sale without penalty or renegotiate the terms of the sale to reflect the appraised value. How does an appraisal contingency work? An appraisal contingency states that the sale of the property is contingent upon the property being appraised for a certain value. Here's how it works. The buyer and seller agree on a purchase price for the property. The buyer has a professional appraiser evaluate the property to determine the value. The appraiser considers factors such as the property's size, location, condition, and recent comparable sales in the area. If the appraised value of the property is equal to or higher than the purchase price agreed upon by the buyer and seller, then the contingency is satisfied and the sale can proceed as planned. If the appraised value of the property is lower than the agreed upon purchase price, then the buyer has several options, such as negotiate with the seller to lower the purchase price to match the appraised value, request that the seller makes repairs or upgrades to the property to increase its value, or walk away from the sale altogether, as the contingency allows them to do so without a penalty. An appraisal contingency is important because it protects the buyer from overpaying for a property that is not worth the purchase price. It also provides a way for the buyer to renegotiate or back out of the sale if the property is appraised at a lower value than expected. What happens when the house appraises for less than your offer? If the house appraises for less than the offer, it means that the appraised value of the property is less than the agreed upon purchase price. This situation can have several consequences, including some of the following. Renegotiation of the purchase price. If the house appraises for less than the offer, the buyer can renegotiate with the seller to reduce the purchase price to match the appraised value. If the seller agrees to reduce the price, the buyer can't proceed with the purchase. Additional down payment. If the buyer still wants to purchase the property at that agreed price, even though the appraised value is less, the buyer may need to make a larger down payment to compensate for a shortfall in the appraised value. This is because the lender will only provide a mortgage loan up to the appraised value of the property. Cancellation of the deal. If the seller is not willing to renegotiate the purchase price and the buyer is unable or unwilling to make a larger down payment, the deal may be canceled. This can be frustrating for both parties, and it means that the transaction cannot proceed as planned. It's important to note that a low appraisal is not always a deal breaker. If the buyer and seller are willing to work together to find a mutually acceptable solution, they may still be able to proceed with the purchase. When should I use or waive an appraisal contingency? Here are some factors to consider when deciding whether to use or waive an appraisal contingency. If you are obtaining financing to purchase the property, the lender will typically require an appraisal to determine the value of the property. The property is unique. If the property is unique and there aren't many comparable properties to use for the appraisal, it may be wise to include an appraisal contingency to protect yourself in case the appraiser values the property lower than the purchase price. You are concerned about overpaying. If you are concerned that you might be overpaying for the property, including an appraisal contingency can give you an out-of-pocket. If you are a cash buyer and don't need financing to purchase the property, you may consider waiving the appraisal contingency. In this case, you would be assuming the risk that the property won't appraise for the purchase price. But if you are comfortable with that risk, waiving the contingency can make you offer more attractive to the seller. If the property is in a highly competitive market and there are multiple offers, waiving the appraisal contingency can make your offer more competitive. However, be aware if the property doesn't appraise for the purchase price, you may be responsible for making up the difference in cash. If you have done your own research and are confident that the property is worth the purchase price, you may consider waiving the appraisal contingency. However, be aware that if the property doesn't appraise for the purchase price, you may again be responsible for making up the difference in cash. What determines the appraisal value of a home? The appraisal value of a home is determined by a licensed appraiser who evaluates various factors such as property characteristics. The appraiser considers the square footage of the property, the number of bedrooms, bathrooms, the age of the property, and any unique features such as pool or fireplace. Location. The appraiser looks at the location of the property, including the neighborhood, nearby amenities, and school district. Comparable property. The appraiser compares the property to recently sold properties in the area that are similar in size, age, and features to determine a fair market value. Condition of the property. The appraiser evaluates the condition of property, including any needed repairs or updates. Market trends. The appraiser considers market trends and economic conditions that may affect the value of the property. Zoning and use restrictions. The appraiser takes into account any zoning or use restriction that may affect the value of the property. All of these factors are taken into consideration by the appraiser to determine the fair market value of the property. The appraisal value is important in determining the maximum amount a lender is willing to finance and helps the buyer and seller negotiate a fair price for the property. Is there an appraisal contingency deadline? The appraisal contingency deadline is negotiated between the buyer and seller and is typically set as 7 to 10 days after the appraisal is conducted. If the buyer misses the deadline, they may lose their right to terminate the contract based on the appraisal results. It's important to understand and meet all the deadlines in contract with the help of a real estate agent or attorney. How long is an appraisal good for? Appraisals are typically considered valid for 120 days from the date of the report. However, market conditions and other factors can affect the value of the property over time, so the appraisal is only a snapshot of the property's value at a specific point in time. Can a seller back out if the appraisal is high? It's rare for a seller to back out of a transaction because the appraisal value is high. Generally, once a purchase agreement is signed, the seller is legally bound to sell the property to the buyer at the agreed upon price, regardless of the appraisal value. However, there are some exceptions depending on terms of the contract and state laws. Buyers and sellers should review the purchase agreement carefully and consult with a real estate agent or attorney if they have concerns. Consult with a real estate agent or attorney if they have concerns. Who pays for an appraisal? In a typical home purchase transaction, the buyer is responsible for paying for the appraisal as part of their closing costs. However, in some cases, the sellers may agree to pay for the appraisal. How long does an appraisal take? The timeline for an appraisal can vary depending on factors such as size of the property, appraiser's workload, and local market conditions. Generally, the appraisal process can take anywhere from a few days to a few weeks. How much does an appraisal cost? The cost of an appraisal varies depending on the location, size, and complexity of the property, but it typically ranges from a few $100s to several $100s. This concludes a segment on appraisal contingencies. Stay tuned for a deep dive into other common contingencies in residential real estate. Hope this has been helpful. Please like, comment, and subscribe. I'm William Hooks with ERA Brokers Consolidated.